Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Lyft stock has actually recovered a little bit recently, and second quarter results were maybe not as bad as investors were expecting. So I want to dig through exactly what happened in the quarter. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you like this video, check out my newsletter, Asymmetric Investing, in the show notes. And I want to get right to the earnings release. The challenge for these ride-sharing companies is trying to operate a cash flow positive because they've been burning billions and billions of cash. If you look at Lyft and Uber together, just been cash incinerators over their history, but that's starting to turn around. Uber is really starting to turn around its operations. Lyft is a little bit further behind, doesn't have nearly the same scale, but things were improved a little bit. You can see that revenue was up 3% year over year on an 18% increase in rides. Net loss was $114.3 million, but that compared to $187.6 million loss in the first quarter and $377.2 million loss in the second quarter of 2022. So those losses are still there, but they're getting better. Look out to next quarter, and management is expecting revenue to increase a little bit to $1.13 to $1.15 billion and adjusted EBITDA to be positive $75 to $85 million. Second quarter, EBITDA was $41 million. So again, pretty significant increase on a proxy for cash flow, which is what adjusted EBITDA is. The number of active riders were up 8.2% in the quarter, and revenue per active rider down a little bit, but still $47.51. Now, if we look at the statement of cash flows, this is going to tell us a little bit more about how much runway Lyft has. You can see that this is for the 6 months ended June 30th, 2023. Net loss was $302 million. You add back things like stock-based compensation, which is basically the same as the company's loss. You have adjustments to payables, insurance reserves, all kinds of other items in here. But at the end of the day, net cash used in operating activities was $144 million. That was improving from a year ago. And like I said, there was improvements in the second quarter as well. Cash from investing activities, this is mostly selling marketable securities or the maturity of short-term marketable securities. So wouldn't read a whole lot into that. What I would look at is the balance sheet up here. And this is where you can see cash and short-term investments, about $1.7 billion. So a long runway there that is offset slightly by $8 million of long-term debt, but the balance sheet looks pretty solid for Lyft. If we look at the company's valuation, you can see that it has a $4.4 billion market cap. As I'm recording, enterprise value, when you add in debt and pull out cash, $3.8 billion. Enterprise value to sales now under 1, so that's a pretty attractive multiple. Enterprise value to next 12 months EBITDA, 14.9. So if the company can turn operations around, could be a pretty attractive valuation for Lyft. The challenge for Lyft is continuing to grow that network effect. So increasing the number of users it has and the number of drivers it has. And that's really been the criticism of Lyft for a very long time, is that drivers actually prefer Uber, even though they can drive for both Uber and Lyft at the same time. As a result, Uber has more scale, more drivers, attracts more users, and ultimately leads to higher margins and higher cash flow. Lyft is kind of playing from behind, but you can see that there are some significant operating improvements. If we see that continue, then we could see a better long-term improvement for the company. And I think this is really just following Uber right now. Uber is focusing more on cash flow as well, not just growth. Lyft can follow that, do things like increase prices, increase take rate, which may not make drivers happy, but it makes the business a little bit healthier. So not a stock that I own right now, but does look like it's at least headed in the right direction. So one that I'm going to keep an eye on. But what did you think of Lyft's results for the quarter? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.